Hey, good morning, team. Morning. Welcome to another Wealth Coffee Chat. Morning, Sean. Morning, Laura. Morning, Stephen. Morning, Alison. Jeff, off to the Philippines for a surf trip, mate. Hey, you should drop in and see our team in the Philippines, Jeff. We've got a nice little office in the Philippines. Some great people over there. Wonderful, lovely country. Mate, enjoy that surfing. It's meant to be pretty awesome. There we go. Ajith, good morning. Morning to you guys. Hey, g'day. Wonderful Wednesday. Hopefully, mate, no, it's more like a wet Wednesday, eh? A very wet Wednesday. Thoughts go out to those people down in the Northern Rivers areas, folks. Stay safe. I hear there's a bit more water coming there again now, which is a bit of a bummer on the back of such a disaster of recent times. So thoughts are with you guys. Stay safe. There we go. All right, let's have a chat. Let's have a Wealth Coffee Chat. Good morning. If you guys don't know, most of you do. Jason Witten's my name. There it is on the screen. Been property investing over 20 years, probably a bit more now. I keep saying that, and I think the time keeps on moving on, as we all do. Time waits for no one, and coaching property investors just like you over 18 years across Australia and New Zealand with my crew. And along the way, we've paid attention, we've learnt a few things, and each morning I get a chance to hang out with you guys over a good coffee and have a bit of a chat about what's going on. So welcome along. If you're new, give us a shout out in the chat. Hey, good morning. How do I say that one? Sarabot. Hopefully that was okay. Rodney, good morning. Good to see a bunch of you guys on now. Big question for a lot of investors at the moment, a lot of homeowners, a lot of property owners, to fix or not fix. Let me know in the chat if you've got that question on your mind, or you've already, taken the plunge to fix interest rates on some of your properties for a short period of time, a long period of time, lock in your costs. What is going on out there? A lot of talk about, interest rates going up, team. What can we do to get ahead of that or to be aware of it in the world? Alison nailed it. I think that's fantastic. Yeah, there you go. Good, Jeff. That's what buffers are for, mate. That's what buffers are for. And it's taken quite a while, actually, at the moment. Jeff sort of said here he's got a oven thermostat issue, had a hot water element in his property, had to fix. That's what your buffer's for. Immediately pay for it, knock it over. The insurance will take time. But yeah, it's an interesting one. Ben actually has got a good observation. And Ben, I think, were you looking at my notes, Ben? I've got some of that to chat to you guys about today. And then, Jeff saying, seeing the variable reduced. But I think Alison, and I'll show you guys in a minute where we're at. So let's have a bit of a chat. Let's have a bit of a look at to fix or not fix. And it's never a universal answer to that question. Hopefully you guys can see that. But, right now, here's what's going on in the marketplace, right? We have had a pretty good run of it, to be honest, when it comes to the interest rates and the cost of buying money, locking in some things. And it looks to me, Alison, you've sort of nailed it in around this section here, which is you've locked in a 3 or a 4 year interest rate here, 4 years, 1.98, abracadabra. And thankfully, you're not looking to lock that in now because the pricing, is up. And so what's going on out there in the marketplace, team? Well, the market is pricing in an interest rate rise, and it's on its way. Is it going to be significant? it's going to be between 1 and 2% interest rate rise. So within about what we're talking here, from what I can tell, within 3 to 4 years, you know, the interest rate will be from 2 to 4-ish. All right. Okay. Now, that's not the end of the world. Matter of fact, that's still extremely cheap money. That's extremely cheap money. This cost of money here, 2%, was like insanely insane. Like the money was free, basically, team. Money was free. And for some people, like Alison, boom, took advantage of it. Right time, right place, took the action, and Alison, you've done well. For the most part, folks, though, unless you're Alison, for the most part, let's have a look at this, a bit of a look at interest rates or fixed interest rates. And if you have a look at the yellow line, for the most part, what Ben said before, over the longer period, fixed interest rates are often more expensive than the variable rate, okay? So just so we're all clear, so we have fixed interest rate versus a variable, right? And then we've got principal and interest versus interest only, okay? So, and sometimes, because sometimes people are new to this stuff, we get the concepts crossed up and mixed up. They think, oh, fixed is interest only, okay? So you can have a fixed P&I loan, or you can have a variable interest only loan, or you can have a fixed interest only loan, et cetera, et cetera. And this is the combo, the kind of the Hail Mary combo, to be honest, is if you could fix it at a really low rate and be interest only for a good chunk of time, then that would be a pretty nice tick in the box, to be honest. So, but I digress. Let's have a look at this. So if you have a look at the yellow line, and I don't think my highlighter works on this. Let me see if it works. This orange line. Oh, yep. Oh, that's terrible, isn't it? Should have practiced that a bit earlier. Anyway, that's not going to work. But you guys can see this yellow line. And for the most part, what that's showing, team, what that's showing right now is that for the most part, the blue line, other than kind of up here for a brief period, and where sort of Alison has pretty well nailed it down here, for the most part, the variable rates are lower than the fixed rates, okay? And for us as property investors, sometimes we get a little bit excited about, oh, there's a cost coming, there's a problem coming, we'll lock in our expenses. And that's perfectly fine. Our interest rates are the largest expense, we have when it comes to owning a bit of real estate. Because if you think about it, you know, when we have our property, number one expense is our interest. And then by a country mile, folks, what's our next expense? You know, what's our next expense for our properties? Maybe rates or, body corp, right? But your interest rates could be $25,000 for the year, and your rates could be $2,000 for the year, okay? So it is an expense that you want to manage and control. However, for some of us, we need to be cognizant of, if we're going to lock in interest rates, what the upside or the downside of that might be. Now, tell me in the chat, if you lock your interest rates in, what is some of the downside, and depends on how you structure that locking in of the interest rate, but what is some of the downside of doing that when you lock in a loan? Upside is you've got a fixed known expense, and if you can get it right and time it right, then that's fantastic. Like Alison has done, that's probably going to work absolutely swimmingly for Alison. One of the challenges, though, if you lock an interest rate in, so you go, I'm going to lock in a $400,000 mortgage here, 400K, and I'm going to lock that in with a fixed interest rate on a term, let's say 3 years. 1, 2, 3. Let's say, you get a fee if you exit. Yep. Okay, that's good. No access to funds is the main one, Jeff. You're dead right. And if we lock it in the wrong way, let's say year 2, if you have to sell, there might be some fees. Looks like Alison's locked in a 0-1 anyway, but there are fees associated with breaking the loan, right? So you've got 400K locked in, but let's say you get some growth in your property and you make $200,000 in equity. Let's say that just happened in the last couple of years. Getting access to that will cost you money, all right? The loan has to be rewritten and redone. They won't just allow you to unlock that $200,000, okay? So some of these conversations need to be thought through. There's ways to make that work. What's a way to make that work where you can hedge your bets, team? In here, you can do things like I'm going to lock in 80% of my loan and I'm going to leave, that is fixed and that is floating. A floating rate. So 20% of maybe, or 10% or whatever. And let's say the growth occurs. And so you can increase that loan because technically you end up with 2 loans, folks, against one bit of real estate, etc. All right. So there's ways to manage that and think about it as a property investor. Having access to your funds is pretty important. Now, for the most part, I think the time for me to lock in an interest rate in a fixed, split loans, that's it, Ajith. The time to lock in a really sharp fixed interest rate is done and dusted, team. For me right now, I can't see us having any of that, any benefit right now other than sticking with the floating rate, all right? So have a look at what's on offer. The fixed interest rate might be 3.5 and the floating rate, Jeff said it before, the floating rate has been reduced, okay, of recent times, a couple of points, team. So that's something to keep an eye on because the market will price in what's going on out there in the world of interest rates, right? So I think the time to lock in a 3-year interest rate for the most part is probably done and dusted beneficially. And I think we're going to benefit for the next few years on the floating rate, okay? That's where I think things are sitting. Are the banks okay? Are the banks safe? I heard this the other day. I'm worried about the banks, et cetera, et cetera. Are they making money? Are they they're making billions, team. Billions. All right? Absolutely billions. And that's perfect, Alison. Absolutely. So, let's not shed a tear for the old lenders out there, team, because these guys have what's called a spread, a buy price spread, BPS, between the cost of funding and what they sell that money for, all right? And, all through the pandemic, they haven't lost margin at all, team. So, in matter of fact, what's happening now, the banks are of their own accord putting up their own interest rates, the fixed rates and et cetera, well before, the Reserve Bank does anything and all those sorts of things. They're pricing in, they're starting to price in more profit and more margin into their business. So, we don't have to worry too much about the banks. The volume of lending is something that, Alison, I'm with you, mate. I'm with you. No use complaining about the banks making millions. Borrow money from them and buy their shares. That's a good plan. Love it. So, folks, the question the other day was, should I fix my interest rates? Interest rates are going to rise in the future. For me, most likely, the answer will probably be no. Unless it's like a 1 year short one, you nick a really good bargain. But again, what's the point of that if you are in acquisition phase? You need access to your money. You need to be able to move fast on your cash. You know, the predominant style of setting up your loans for acquisition phase team is usually floating rate, interest only. If you can get it for 5 years, great. And, you know, start at a 90% loan if it's early days, and get it to 80% as at some point in the future. When your loans are sitting at sort of 80% and you've got a 20% equity in there, that's when you can actually then price these interest rates a bit better. You know, a 90% loan, you know, might cost you 3%, where an 80% loan might cost you, you know, call it 2.5%. And what's happening right now is the market is pricing what they deem as higher risk loans. They're costing more, okay? So anytime your equity grows and you don't need that equity to buy another property, maybe you've done your shopping, you've got your 5, 6, 8, 10 properties, whatever you're looking for. Then if you can keep your loan to value ratios at 80% across your portfolio, then you can you know, get a better deal. And whoever's that, who's the Facebook user? Give us a shout out. You're probably in one of the groups, our private groups. And yes, the second tier lenders. So other lenders out there now, team, are becoming more attractive as the banks are getting less and less, you know, free money from the government. All right. Mark, good one, Mark. Nice one. So, you know, second tier lenders, private lending, as the interest rates creep back up to what we would call maybe just a reasonable level, you know, 4%, 3.5%, 4%, the ability for us to look to other alternative lending sources in the marketplace will become very apparent, okay? And the ability to borrow indifferently from those lenders is pretty good. You know, these days for me, I have to use different alternative lending sources because of all the stuff that I do. And, you know, I've got to pay a premium for that. But I'm happy to pay a premium. You know, my interest rate's like 4.5, 5. Where, you know, regular investors with not a complicated portfolio can get, you know, 2.5, 3. Okay, so there you go. All right, team. Well, that's about it today. Thought we'd just have a quick chat about what's going on in the world of interest rates. For me right now, if you're going to lock in, don't lock in 100% of the loan. Don't lock it in too long. The variable rate, it looks like it's going to be cheaper than the fixed rate for the next 2 to 4 years. And we do have an interest rate rise coming at some point. And it's not going to be disastrously fast, team. This is the thing, all right, as we go. So just keep an eye on that stuff, folks. All right, mate. Thanks for the shout out. Ben, hey, good to see you. Alison, Mark, Jeff, Ajith, all of you guys on today. Rodney, Sarah Bott, whoever's there. Stephen, Laura, Sean, if you're still there, thanks for hanging out, team. Great to spend some time with you guys. It's a wonderful Wednesday. And, hey, listen. It is budget time. Well, the budget's out, pre-election budget. And Andy Fenton and I are going to break that down on Friday. So there you go. Hey, Stephen. It's Stephen's birthday. It's Stephen's birthday. Is it today, Stephen? 52 today. Here we go. This is for you. Happy birthday! Hopefully that little sound effect worked. Anyway, I'm feeling that making it around the sun 52 times is a pretty good achievement, Stephen. So well done, mate. Happy birthday to you. Join me tomorrow for another Wealth Coffee Chat, folks. And on Friday, we're going to break the budget down. All right. Thanks, Rose. Thanks, Stephen. See you, team. Great to hang out. Have a good day. Stay safe and dry wherever you are.